Good morning, everybody. Welcome to MarketStream.live. It is May 30th. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. And this is where we go over everything that's going on in Europe, and it's setting a tone. We had the major indices in China and Hong Kong closed for a holiday, like here in the States overnight. We also had basically limited news cycle, not much going on as far as economic data. But in Europe, there is a little bit of geopolitical components coming out. And what's notable is that we're starting to see that the last tranche, or one of the last tranches of the Greek bailout, it's under some controversy right now. In the overnight headlines, we did hear from some unnamed sources that the Greeks were potentially looking at opting out of the last tranche. That comes on the tail end of a discussion by the Germans basically saying if they can't come to terms, they're pushing to withhold that bailout tranche. So it doesn't really matter what the Greeks want. They may not get it anyways. That has put financial names in Europe definitely under pressure. If we take a look at the UK and look at the FTSE, you can clearly see that they're opening up right now down 24. That's good for about 0.3% to the downside. Again, the UK financials and energy, that's really what's going to start moving markets in the UK and universally with the financials across the board in Europe. This pressure in the banks and the uncertainty with this Greek tranche going out, as well as the fact that the race, June 8th, is going to be we're going to have an election. Right now, the Conservatives are polling in around up about 43% of the vote going to the Conservatives, with 37% going to the Labour Party. That's tightened up quite a bit in the last week or so, where it was almost a 20% gap for the Conservatives. So that gap is closing, getting closer to that June 8th data. Again, what also is moving the markets, and this is universally, but in the UK, British Airways had an IT issue. That kind of shook not only British Airways, but Ryanair also came out and they gave disappointing guidance going into fiscal year 17 and the remainder of this year as far as the Irish airline is concerned. That has basically put airlines overseas under pressure. Let's see if that actually translates into something here in the States, because if you start to see air travel starting to be mixed and under pressure in Europe, that could flow over here into the States as well as into the Asian regions. Taking a look at Germany and the DAX, trading down about 12 points right now at 12,616. You're seeing, again, banks and autos continue to be under pressure. We saw that trend begin last week with the discussions with the Greek tranche. Angela Merkel also was coming out with some statements saying that the Germans were not happy as far as their partnership with the United States after the G7 meeting and some of the statements that President Trump was making at NATO. The Germans were not happy with that, and they felt that the relationship at this juncture is stressed at best. This has also influenced the French CAC markets. And the one thing that I want to note about the French CAC and the German markets, take a look at this right here. You actually see that the French markets opened up under the 20-day moving average. That, to me, puts anybody that has exposure to France or an ETF that has exposure to French stocks, the short-term bulls are under pressure. They've been knocked on their heels. The next challenge spot is going to be this 50-day moving average. A challenge of there and a break of there means that the short-term and intermediate-term bulls, that means that those short-term traders, as well as those institutions, may be under pressure, and that could send a ripple effect. Looking at the German markets, we see that they are right above the 20-day moving average, but they are challenging it, unlike the UK markets, which are pulling back, but off of highs, and they're well above this 20 and 50-day moving average. This gives me context, folks, about who's in control and what segments of the European markets are doing well. And those that are associated with materials, energy, and financials are doing well. Those that are more reliant on financials and maybe exporting, they're grinding and potentially under pressure. And again, financials and exporting, that's with the French and the Germans. this could be something that we want to stay tuned to, because this could put some ripple effects, maybe some volatility into the markets. Also, keep an eye on not only the currency markets, whether it's the British pound, the euro. You want to keep an eye on the 10-year bonds. And let's take, for instance, Germany, down ever so slightly, but they have been in a pretty decent uptrend over the last 5 sessions. Challenge today. Let's see if that continues. The bulls have been in control in the bond markets in Europe. The French 10-year and the UK 10-year all have been in the bulls' court. That means that if bond prices are going up, they're parking money into these areas that are more certain, that are more risk averse. And that is not going to be a net positive for the securities markets if this continues and if the pace actually picks up. So keep an eye on those 10 years. All right, folks, that's it right now for taking a look at On the Open and all the European action. Starting to set the tone here in the States. We're going to be back at 9:30 Central, 8:30 Eastern time, or 9:30 Eastern, 8:30 Central. And we will be talking about everything that's going on in the U.S. market. So we'll see you then.